What is up, guys? It's CJ here, and welcome back to episode 3 of my HyroTrader challenge. I'm calling it Resilience. The quote of the episode: there can be no failure in the accomplishment of any goal in life that is harmonious with the universal, as long as you understand your power and persist in your intent. This quote is from the book The Master Key System by Charles Haanel, and I think it's very important for the trading journey. I'm feeling it a lot in my own journey right now. Like, we are at the point where, if you've seen episode 2, like things were not going smoothly. There was a lot of losses and there was a lot of growth. So now we're coming into resilience. What do we do with that? How do we transform ourselves? And how do we keep going? So resilience, basically what it takes to keep going. The ability to take a punch and get back up is a non-negotiable in this game. It can actually be just the cost of doing business. Losses are going to be a part of the path of growth if they are approached from a learning, journaling, and refining perspective, not from a victim mentality. You will have losing streaks. You will have moments of doubt. You will want to quit. The ones who make it are the ones who don't. So I've definitely felt all of these. Lots of doubt creep in, especially the way these last couple months have gone. Mark Douglas said, though, something that I really like is anything can happen in the next trade. Anything. That means your worst loss and your best trade are equally possible at any moment. The trader who can hold both of these truths simultaneously without being attached to either one, that's the trader who makes it. That's ultimately what we need to hold. When we execute our system and we're executing without ego, that system is either going to play out or it's not. It can play out perfectly, or it could stop you out immediately. Every trade is a probability, as we discussed earlier in the series. But when you're in the middle of a losing streak, your brain does not think in probabilities. It thinks in pain. It gets used to that pain as well. It starts associating every trade you take with losses. It takes the losses personally, and that hurts the ego. It starts telling you stories that you are not good enough, that your edge does not work anymore, and that maybe you're not cut out for this and should just go get a real job. I know probably most of you who are on the come up and are in it have probably had these thoughts before. I think it's just part of the journey, and it's just something to be resilient towards, and it's something to overcome because it's not the truth at the end of the day. What your brain is not aware of is that there is higher orders at play, and your path will be unique to you. The losses, while they could be part of probabilities against you, could also be there for your growth as a trader. When you actually journal and analyze your psychology in the trades you take, especially on the come up, these are the data points you need in order to grow. Growth normally comes after pain, leading to leveling up, a step back to take 3 steps forward. So what do I mean by that? Think about it like you're in the gym and you are breaking down your muscles for them to grow. So sometimes the losses are breaking us down for us to grow. We analyze the losses and then we come back stronger. So let's start off with oil. This is a market that is now tradable on HyroTrader with the challenge. So it was my most profitable, I think, pair. It's not a pair, but my most profitable chart this year. So I'm now looking to take trades on this challenge on this asset. So if we look at oil, we can see that we had a breaker structure back to bullish on our level 2 from this high that we put in. So if you remember the accumulation, I'll really zoom out here just very quickly. The accumulation that sent us up here was right here, and it was a Wyckoff Model 1. Now, it looks like it's not a Model 1 on this MCL chart. I'm just using the MCL chart for day-to-day stuff. On most charts, this low takes that low, and it has a local Model 2 that has pumped us up pretty aggressively. So coming back into the local price action, we can see that we got that breaker structure, but we have heavy supply up at this high. And when we approach the supply, we end up forming a range. So we'll get down in the lower time frames here, and we will dissect that range and decode the price action. So this was a trade that I did take on the challenge, so we will add it. For one, I like to start my Wyckoff phases at the beginning. So identifying a PSY in a distribution model. So we have that. Comes into, so it's preliminary supply. It comes into that first layer of supply and it gets the first rejection. Now, we get a buying climax, which also breaks internal structure from now this low up, I think. Yeah, right here. Yes. So you have a buying climax. And now take a look at this return to zone. Part of the reason I do use this chart is for volume. And at this point, it's pretty neutral. The return to zone is absolutely spectacular. You can see all of those lows stacking up, creating a beautiful sell side liquidity curve. So going to mark our first points and see if we can confirm a UTB. Kind of like rocking black dots for this chart. Not sure why. Oil vibes. But this is our market structure low, probably on some lower time frame. And we'll play it out a little bit. We'll see how the range develops. So there you get that break of structure right here, confirming an upthrust. Let's put that on the chart. Make that bearish. You only have a 2-tap model now. I'm not currently trading 2-taps, though I am fascinated by them. So no trade here. Didn't really leave anything good. I think there was a little bit of supply right here. Not sure if that was on every chart, but I'll let it play out. So we sweep some of our sell side liquidity, but then we end up making our way back up. And right there, you take that high again. So although it was a looks kind of aggressive move up, we actually did not leave any demand. We did not leave any demand in this move up. So I was viewing this move up as manipulation to put in our UTAD of the model. So let's keep playing it. There you take that high once more. And right there, you get a bearish break of structure, confirming a Wyckoff Model 1 distribution. So you can see how we're confirming every point within the model. That's what I like to see. And we're going to talk about, I'll probably talk about it a bit more in other videos pertaining to Wyckoff. But sure, you could even argue that there's a kind of stretched out local model here as well. But I'm just viewing that as market structure. And you do get that break right there. So I never caught the initial break. I watched it happen. And then on this retest right here, I was able to secure an entry targeting this low for like a 2.8. Nothing too crazy. Nothing too crazy from an RR perspective. I'm in a phase right now where I do not care at all about RR. Some traders I talk to, they won't even look at a trade that's even like a 3 RR. I think this is just being addicted to high RRs. I really could not care as long as the model is confirmed and it is a valid setup with great context. I am happy to be in the model. So here's our trade. We can draw in our liquidity curve, which, although we swept some of it, continued to get better with no demand on this move up. So even just from a looks perspective, this is an amazing looking model. We can check our volume again, and that volume break of structure happens just back inside our volume area high. And it's a pretty evenly distributed volume profile, though it's not a perfect bell, and you do have the POC down here, but there's no demand POI backing that POC. So if we play it out, you'll see how it progresses. And bang, right there we hit the technical target of our model. I believe we have an image. Nice. So, little proof of work right there. You can trade oil on the HyroTrader prop firm. It's called CL, and that's what we use in futures as well. It's called CL. So you can trade one of the most beautiful trading charts in the world, if not the best right now. And you didn't even get a retest of more refined supply, so that entry I was barely in drawdown at any point. If I'd have been waiting for more refined levels up here, I would have been sidelined. Let's quickly talk about how I could have played this better. For one, I was slightly under risked on it because I was unsure. I'd never traded the USDT pair, which you will be trading if you're trading on HyroTrader, because you're trading on every pair that Bybit has, not Bybit TradFi, but Bybit itself. So CL USDT is the tethered pair, and I'd never traded it before, and it's very new, and so I was unsure how the process was going to be, but I can tell you it was absolutely seamless, and I should have full risked on this. Because if I see a model like this on any other pair, and yes, I took this on a bunch of other accounts as well. But the main takeaway for me is I was a little bit of lack, I guess, from last episode, not having like reeled anything in. And then I took everything at this technical target because I wasn't, I was just kind of wanted to lock it in, but you can see how advantageous it would have been to leave a runner, and a good size runner too, because you're taking a trade in the premium section of a bigger range, which I never fully mentioned, I guess, at the start, but it's in extreme supply. We're as range traders, we can see rotations from either side of the range. So even though our technical target of the Wyckoff model is here, we can absolutely see follow through, and that's exactly what we got. Like, we talk about a 2.8 RR to this technical target, but the follow through is absolutely insane. So even when you do win, it sometimes is not even satisfying because you don't feel like you played it perfectly, and that was definitely the case for me after seeing these bearish candles here and the potential that this trade actually did have. So that's oil. Those are my takeaways from it. Just a beautiful trade. Let me know in the comment section if you guys also took this trade. I'd be very curious because this was a textbook Wyckoff Model 1 distribution setup. So now we're going to head into silver here. And I'm going to use the forex.com chart, so we're not going to take a look at volume. But this is the next trade that I took in the series, and we're going to talk about the differences between this silver trade and the oil trade. So for one, the silver trade is a distribution, same as oil, but it's coming in the discount section of a bigger range. So if we look at oil and we just zoom out, I just want to be clear about what I mean by that, is when you look at this bigger range here's ranging price action like this, you can see that that distribution model takes place in the upper section of the range. So that is a major +1 when you're trading distribution models. You can see on silver here, we're trading a distribution model, but we're in now the discount section. And albeit if you use the whole range, extreme discount. So you may be asking yourself, CJ, why would you trade that then ever? Because I was trading it as a Wyckoff in Wyckoff, or Wyckoff, not Wyckoff in Wyckoff, but to create Wyckoff. So what that means is that, and we see it all the time, is where you get a distribution model in an accumulation case to then put in the third tap of a model. So in this case, we have confirmed right here a STB, a spring in phase B. So I will outline, and they will be slightly different, right, from distribution models. You can see how nice this SFP of this market structure low is. This is also an SFP. So I am expecting a rotation back up on silver. And I do have a playbook actually on silver that we have been following to perfection. I'll probably update that on X. But so here is now how I'm viewing silver. So I wanted a distribution in this area coming into supply to then put in a LPS, a last point of support. And your third tap of a Model 2, I really like this demand POI to hold for a Model 2 to then make our way up. So this was kind of the pre-plan. Trade something like this, even if it's faster, come down, still trade the long, and then run it back up something to the likes of this. That would have been my ideal scenario, you know, and then we could have drawn our liquidity curve perfectly up into that point, and you would have had yourself just a picture perfect Model 2 accumulation. Let's talk about the range in a vacuum now. So now you understand the context of why I was trading this and why it can be looked at as a valid area to look for a distribution, even though we are in the discount section. So looking at the range, you will notice things that are different than the oil range, for example. So what we can see is here we have a PSY. Here we have a buying climax that did not break any structure really, internal right here slightly, and then got to move up, and you get it with just a wick and then down. But here you have your UTB, up thrust in phase B, as a local model. And then what you also have is your UTAD as a local model. So remember, if we go back to CL here, look at our up thrusts. They're just wicks, and then down. So I guess I'll do a little bit of drawing. We're gonna talk technicals here. So my favorite type of model kind of goes like this. So it's coming up, and we'll say that is the PSY, and then you come up, and then you create a local model. So something that looks like this. And then you sell off, breaking some structure. You come down, maybe get an AR, that's nice, and then you build your liquidity, take that high, sell off aggressively, and I'll just do a Model 2 here. So you come into extreme supply, take that, and then, you know, get another local model potentially. So here's the drawing, and I'll make it clear. This is the preferred model. So it doesn't matter if this is a Model 1 and this high takes this high again. I just drew it as a Model 2. But in doing some research a little bit and hearing a little bit about auction market theory, these types of local low time frame micro models can be looked at as failed auctions sometimes, and so market makers want to take them out. It's not necessarily looking at it like these models are going to be protected all the time. And sometimes when it's just a wick, that can be a successful auction, you know, just up, smart money or market makers are in and selling off back into the range. This is ideally how I want to have my Wyckoff models looking. So we're getting a little bit into Wyckoff fee and logic a little bit and just my own kind of thing on it. So this is my preferred model right here, where you actually do have a buying climax that is one of these micro models that we see on silver, and we see it all the time to create that range high. Break some structure, get an AR. So I use AR as automatic reaction or rally. So in a distribution model, we call it automatic rally. It's because it's a rally back up, most likely from the algorithms, to then deviate that high. And that can be a micro model as well. But we're mainly talking about these models. So you can see in the silver example, this model is your UTB and also your UTAD. So I'm taking that it is more likely to be taken out. And so the way that I want to see it is market structure trending up, getting a local model, and then wicks, successful auctions to put in your next Wyckoff points. I like them also for LPSYs, and you do get them quite often to complete the model. So when it comes to this end then of the Wyckoff model, it can be different. So wicks preferred, this not as preferred. And I was aware of this when I was taking it. I had it written down. I was fully prepared to lose this because I had to know. And we'll see how that develops over time. But you can see the micro model gets taken out. And then there's a low time frame break of structure right here. Entered right there. And I also want to talk about this. So my entry right here was around a 9 when the break structure happened. It's a little too high. So around there, but it looks more clear if you zoom in. But I do not need this RR when a potential LPSY point is just looking like this. Yes, it can happen. Absolutely, we could come down. But the smarter play is to just put this above here. So we're allowed to deviate that high again, maybe even get a local model like I was just talking about, because I like local models for LPSYs, especially in Model 1s and also Model 2s, but just in the LPSY 2 and 3, but we won't get into that. So we can see what happens here on silver is we looked like we were about to break down, but then we come up and we take me out of that trade. Would have still been in this trade idea where you're covering the UTAD with your stop loss, aka third tap. But I end up getting stopped out of this trade. I journaled it. I wrote down my notes. I just shared with you guys my notes from it, and it sparked a whole clarity about the models and what we actually want to see sometimes. But then you did get that sell off to start the week where most things like NQ and ES sold off. But then that's a gap actually, and so it will get filled, and we continue on higher. So this actually is not the best even when you get that aggressive sell off, because they want to fill the gap, and then you just end up going higher. So that was the silver trade. End up taking a loss there. So we kind of are reverted back. We would like the oil trade to have printed us a lot more. I thought we deserved a bit better fate, should have risked more, and should have held a runner. So if we're getting back into resilience, we want to talk about getting beyond, or I guess just how we want to be resilient. Like, we don't want to be just grinding and just using resilience as a crutch to be in the wrong mental framework and the wrong frequency. So I guess I'll just touch on this. I didn't want to rewrite the whole thing, but for me, the big thing I want to get across is that we need to be moving from survival to creation. So we want to take ourselves out of this survival, fight or flight that the market always wants to put us in. And we want to get into this place, the inner world of creation. So what does that look like? I'm going to just come straight to X, because I was talking and working on this all week, kind of what I wanted to say about it. So survival versus creation. One keeps you in fight or flight with high cortisol, trying to control your environment. The other is a doorway to a completely different relationship with the market. And this is the relationship that I want with the market, and I think is essential for expedited growth. Most traders live in survival mode without even knowing it, and I'm guilty of this myself. Survival mode focuses on an unwanted past or a dreaded future, worrying about what happens if your trade fails, if you blow another account, if you never make it. I've been in this, constantly, worrying about these things, even doing this challenge publicly. Like, sometimes it's like, oh, like, what are the trades going to look like? But at the end of the day, that's just the ego, and I'm just here to share the journey with you guys. In survival mode, you're trying to force or control an outcome. This is a round peg into a square hole situation. And that's the ego trade. And you've maybe heard this in your life. Oh, well, sometimes, when life's got you down, you got to force a round peg in a square hole. I want to give you a different perspective on this. This isn't the way to take. This is coming from your ego, thinking you as a human in the 3D realm have control over these things, and that there's not a higher power with a grander vision that can see all the actual potentials that are waiting for you. So it is a restructuring of the way that you think about reality a little bit, and more faith in that there is a path for you. There is a guidance that is guiding you along, and it will give you those round holes, even if it's not apparent at the time. And that's when your life flows. That's when things come to you. That is not forcing it. That is getting in the flow. So we'll get back into the thread. When you enter survival, your body shifts into fight or flight. You become chemically altered, designed to be able to respond to immediate threat. So the problem with this is this response is actually good, and it's designed in nature, but it's designed for short-term stress. Like a deer sees a predator, it sees a wolf, it runs, it's in that fight or flight, its senses are narrowed, it's protect the body, run, survive. But then the deer, unlike a human being, just doesn't have the mental capacity to stay in there. It automatically just returns to baseline. Where humans, and therefore traders, we can stay in there permanently because we can just replay the things in our mind that keep us in that fight or flight, worrying about our trade constantly. And so the market then becomes the predator, and that predator can be on you 24/7, especially in crypto. Like the market is going 24/7. So in survival, 3 things dominate your awareness. You want to protect your body. So you feel tension, heart racing, shallow breathing. Your environment, staring at charts, unable to look away, watching every tick. I know we've all been there. Your trade is not going your way and you can't look away. You're staring at it, And then time. How long until this pain ends? Sometimes the pain does end when you lose the trade. Sometimes it doesn't. Sometimes it sticks with you. Sometimes you use that pain into the next trade, and that's something we want to avoid. Living in survival, we focus on the 0.0001% of reality that we can see. Think about that for a second. In this universe, we as humans are only able to perceive that low of a number of the actual true reality. And that's the physical material world directly in front of us. We forget who we actually are is consciousness, which is awareness, and awareness connected to a field of intelligence that contains 99.99% of all the possibilities that are available. So this is what we call the quantum field in quantum theory. We become consumed by the external, and therefore the charts own us. We are only looking at this external reality, and that external reality, what is showing right now, is dictating our internal state and how we are feeling and keeping us in that fight or flight. So that's not necessarily like where we want to be as resilient traders. If you're just resilience in survival the whole time, I feel like that's not the point. Part of resilience is learning about the mind, about the body, and having the awareness to switch the way that we are trading and the way that we are interacting with the market. So the switch then is creation. Creation is the opposite. In creation, you become nobody, no thing, in no time. Your survival addicted self dissolves. The energy that was trapped in stress and tension frees up. It moves to the heart and brain. You feel great, joyful, and expanded. Think about the deer. The deer had all its energy in the stress and fight or flight, but as soon as it gets away, all that energy that it was using is freed up. If we never free ourselves up, all that energy is staying in the tension and is keeping us in the fight or flight. And that's not the place we want to be resilient from. So yeah, I experience this definitely when I'm in chart mode, for sure. So looking at the 2 types of traders, the trader in survival checks their P&L obsessively, revenge trades after losses because they're still feeling those emotions, forces setups that aren't there, feels tension at their desk, trades from fear of missing out on the move because they're locked in and they're only focused on that external right now, and it's controlling the way that they feel internally. The trader in creation waits patiently, sees each setup as a doorway of possibility, executes without attachment or ego, and walks away when the structure is not there because they already feel whole. They do not have to force a setup to prove anything. I've been both of these guys for sure, and that's why I write this is ultimately to myself. Yes, I want to write it for others, but it's also to myself because I've been both of these guys, and I am actively, consciously shifting myself currently to the version of myself that I want to be, which is definitely the trader in creation. When you're living in the elevated emotions of creation, you feel so uplifted that you do not feel the need to try and force how your destiny as a trader is to play out. And that's what we talked about, round peg, square hole. You don't feel the need to have to force it because you are already feeling whole internally. You're already feeling good. And you know that a grander intelligence at play is designing your destiny, how it's actually supposed to turn out. And you, with your limited perception, may not see that. You trust that it will happen because you've already experienced it internally first through the coherent combination of your thoughts and feelings. I will talk about that more in the next episode, I think, and we'll dive more into that, what I mean there. You live in a state of knowingness, not chasing or wanting energy. This allows you to relax into the present moment. So this is very important. The state of knowingness is based mostly on faith, and we can talk about that more in next episode. Stop living in the reactive, creative, stressful mode of survival, as if only the outer world is real. Enter the inner world of the creator. So that's basically what I wanted to say about the switch from survival to creation. And because I thought it was very important to add that in, because there's the type of burning desire that is wrong, and there's the type of resilience that is wrong if we're not actively doing it in the right way that it's going to accelerate us actually into the traders we want to be. Then it's a little bit counterproductive, in my opinion. So we're going to round off with a trade that I'm currently in, and is this trade on EGLD, Multiverse X. So a complete switch up of the CL trade, I would say, in terms of asset class. This is actually an altcoin that I thought was very interesting on the macro, more high time frame, where we had this Model 1 accumulation, but there was internal breaks. I didn't care about the RR. I wanted to see a break structure here. Unfortunately, this candle was pretty aggressive, so I did end up entering higher than I would have liked. I was watching it, all the way down here. But that is the system. The candle closure is up here, so I didn't feel bad about entering. We got a partial liquidity sweep, but we left a ton of liquidity above. So this is interesting to feature in the video because we are actually coming back to my entry. The one thing we did do is we left a lot of supply at this high. I don't know how this trade is going to play out, and ultimately, I don't care. I was hoping for us to sweep all this, and you can check a chart called ORDI. That would have been my ideal scenario from this. It's worth a look up. But I guess what we can see happen is probably now come back to this demand, see if we get another local model or something, and then we're going to have to push up aggressively, preferably flip this supply, and then go higher. So if we do get something like this, that would be great for the challenge, but I will just show a trade that I am in, and it's a trade that I haven't taken in a very long time, which is an altcoin trade in this class of altcoins. But it was definitely a valid setup, so it's cool to finish to show in the video. And the one thing I also really did like is the volume. You're getting that breaker structure above the POC, which is right here, the point of control. And it's all looking very nice and clear. So I just executed on it. So wrapping up the episode with the overview. What I have learned through this stretch is that resilience isn't just about surviving. It's about choosing who you want to be on the other side of the struggle. The losses are going to come. You're going to miss trades from timing. Had to throw that in there because I've probably missed at least 5 A+ setups that have happened during London. And, it's all good. That's just kind of the market timing. Q4 last year was really good for Asia that I trade quite often. And Q1 and the start of Q2 has been amazing for London. So that's just kind of how it goes. The question is, are you enduring them from survival or transforming through them from a state of creation? Remember that any goal you set your mind to and persist in long enough will play out in God's timing. The price you pay for that is to understand your power as the conscious creator of your reality. Detach from how the final outcome will play out, and do not be so worried about the immediate results in your external world when you cannot possibly know what is in store for you with your limited view. And we talked about that. So that's kind of where I'm at, guys. I'm doing this challenge. I'm training a lot of accounts as well. But in this specific challenge, it has been very rocky. It's been a lot of learning. It's been a lot of being tested on some of the things, all the things that I'm learning and that I'm preaching in these videos. And so, yes, we are still up on the challenge. Yes, it's taking way longer than I would have liked, but ultimately I don't care. I'm here for the growth. I'm here for the long run. And I'm also not here to gamble on this challenge. I'm just going to take valid setups as they approach. And I know once they do, things can turn around very quick. So yes, we are up on the challenge around 103K. And I will continue to update how the trades go, break them down, and maybe we'll do a little bit less talking in the next video. But hopefully you guys enjoyed. I've been CJ, and I will see you guys in the next one.